All right. All right. Okay. So, welcome everyone. My name is Neri Gatsby Amaya. I'm the founder of the A-Lister Academy. This conversation is strictly for educational purposes to help Florida buyers and real estate professionals better understand mortgage options, including the first-time home buyer assistance and the Florida Hometown Hero Program. Okay. So, who I have the pleasure of speaking with today?
Oh, I'm Lauren McGill. I'm with American Financial Network. I'm a loan officer.
Ah, okay, Ms. Lauren, you're a financial mortgage loan officer, MLO,
Yeah,
right?
yeah,
All
yes.
right. So let me ask you this: how long have you been originating loans in Florida?
Since 2011.
2011, 2026. That is some. Yes, you got a good
Yes.
a good type doing it. Okay. So what type of loans or what type of buyers do you primarily work with?
I work with a lot of first-time home buyers, and I also work with investors.
Ah, so okay, I actually like that. Hometown buyers and investors. Okay, so this is it's just you're not really picky. You just deal with the
No,
public.
no, exactly.
Ah, I like that. I love that. So what is the biggest misconception buyers have about qualifying for a mortgage today?
I think a lot of misconceptions is that buyers have to be employed on the job for 3 years, or they they don't have enough money to cover closing costs. They think that they do. They think that to cover closing costs, they should have about $5,000. I would say that's wrong. Have about $10,000 to cover all
Oh,
your costs, because
I
you're going
thought
to
it
get
was
questions.
wow. So you got to have at least $10,000.
Yeah,
Okay.
but if you get a seller credit, then we could be talking about $5,000 cash to close.
I think the average can muster up that and figure that one
Yeah,
out. 5,000, but
yes, yeah.
10,000 for sure is on the safe side.
To be safe, if there's no seller concession, then $10,000. If
10,000. Okay.
it's $5,000.
Okay. So I would definitely recommend that. Okay. Now, can you tell me a little bit about the Florida First Time Home Buyer Program? Like, who
Well,
qualifies for
yes,
that?
Florida First Time Home Buyer Program, which is sponsored by a company called Arrive Home. You have
Mm,
to have a middle FICO score of 600, and you're given
mm-hmm,
a loan 3.5% of the purchase price. That's
mm,
repayable in your term. The Florida Hometown Heroes is a down payment assistance that you don't have to pay back until you paid off your first mortgage or until you decide to refinance your home. It's a deferred loan for 5% of the purchase price. And the loan is deferred, and it's deferred for as long as it takes you to pay back your first mortgage. Once you've completely paid off your first mortgage, then you repay the down payment assistance for the Florida First Time Florida Heroes
oh,
program.
okay.
But
So
you
there.
be a government worker. It used to be that you had to be a government worker. That's not the case anymore. But
Oh, really?
you have to be in the field of a nurse or a doctor. You have
Mm.
to be in the medical field to
So
qualify for a Florida First Time Hero.
so could a real estate professional qualify for this as well? Maybe like a realtor or a cam or broker or some or
Not 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 for the Florida Heroes program. They can
okay.
qualify 3.5% of the purchase price down payment assistance program with Arrive Home. That's what they
With the, but not for the Hometown Hero program.
right.
Okay. So let's talk about the Florida First Time Home Buyer Program then, since that's what the
Yes.
professional can do. Florida has a lot of professionals, so that's not always a hero in that
Right.
sense. In that sense.
Right. Right. Exactly.
So with the Florida First Time Home Buyer Program specifically, not the heroes, are there income limits by county? Do you know if that is it?
There's really not. There's really no income limits. The income limits are like 160% of the median income. So you would take the median income and times it by 160%.
Ah,
And
okay.
there's very, very little restriction on income.
And is it any type of property? Like, what are the property types to qualify? Could it just be a single family,
Single,
or could it
single,
condo?
it could be a condo if the condo takes an FHA loan, because it is in the form of an FHA loan. But condos, duplexes, single family home of anything between a single family home to a twoplex to a triplex and a fourplex. That
Okay.
would be.
So are you able to use when you, let's say, are you able to use, let's say if you, let's say somebody like me just get a quadplex, right? Or a triplex. Let's say if I get a triplex, would I be able to use, would I be able to reside in one of the units and use the other
Yes,
two units in
you,
income?
you would have to reside in one of the units because it's for
Okay.
prime only.
Could I use the two existing units I won't reside in and rent to the public? And could I use those two units as a qualifier to
Yeah,
actually get the loan?
as qualifying income, as long as it's market rate rent, you could use that as qualifying income. Yes.
Really?
Yes.
Wow. So I could go out there, go look for a triplex,
Right.
I look at units, and let's say that the market rate for two of the units is, let's say it's a two bedroom, two bathroom for the other two units. Let's say
Right.
25 in South Florida. So that would be additional $5,000. I could use that $5,000 essentially and use it as a
We would
qualifying income.
use 75% of the $5,000. So we would take that times 75%, and we're looking at 3750 in qualifying income. So we can't use the entire 5,000, but we can use $3,750 of that as qualifying income.
Wow, that's still amazing. That's still
Yeah.
amazing, and it's
Yeah.
cases that could really offset the mortgage a lot, tremendously.
Help. Yes.
Oh my gosh, Lauren, you are the best. That's all I can say
Thank
when it comes to
you.
that. When it comes to that. So, now, did we say? I don't think we covered how much money will we actually realistically need. We need about 10,000 to actually close. But how much we're probably going to need to purchase? Can you go back over that part a little bit?
You're going to be given a loan for the down payment. So since you're giving a loan for the down payment, the seller might want a good faith deposit down. And that's okay. That will just count against your cash to close. Because if you're given a loan for the down payment, all you have to do is cover the necessary cash to close. So we're talking safely $10,000.
Okay, so that's where we get back with the 10,000. Okay, got it.
Right.
Because we come in with a loan for the initial front end, and the back end we have to have about $10,000 in our accounts to go ahead and close for that.
Right, right. And it could be a little bit higher because of the type of property, being that it's going to be a triplex, the purchase price will be higher. So,
Right.
I'm talking up to 15,000 for a
Okay.
triplex.
It's worth it for a buyer to have that, because eventually you're going to be buying down your mortgage, or at least, I mean, with that income, it's going to help you pay your mortgage.
Indeed.
Eventually, and you may either pay a little bit than you were going to pay, or a fraction of what you pay, or nothing eventually when your rent appreciates and so forth, and you get market value and things of that nature. So I actually like that concept. I think more buyers should strive to try to see if they can get that, especially in South Florida, where rent is really extremely higher than most of the United States. Right.
Right.
Okay.
And FICO requirement is really low, 600. So it's very possible. When people used to think they needed a 620 or a 640, now they get in at a 600.
And we could combine the Florida First Time Homebuyer Program, right? With program?
No, you can't combine it with any other programs. It's got to be the Florida Derived Home Program, which is offered exclusively by American Financial Network. That is in and of itself. We can't combine that with Hometown Heroes. No.
No. What I mean for the First Time Homebuyer Program, not the Hometown Hero. Are we able to, for the first time, let's say we're not using the Florida Hometown Hero, we're just using First Time Homebuyer programs that you guys have. Can we combine that with other programs?
No, that comes with an FHA loan. So that would be by itself.
Man. Now let's get into the Florida Hometown Heroes a little more specific now. And I remember you were just saying that the professions that are allowed are the healthcare workers and not the professionals as realtors, agents, brokers, and things of that nature. They can't really utilize
No, got to be in the
fire,
medical.
medical, firefighters, law enforcement either law enforcement.
Law enforcement. I know it's medical. Law enforcement. I'm going to say yes to law enforcement. Yes.
What about governmental officials? Are they able to use it, or is it like some kind of stipulations with them?
There's a few stipulations there, so it's really
Okay.
it's and medical.
Okay. So medical and law enforcement. Okay. So I would definitely.
Well, it depends on the title. It depends on the
Mm.
yeah.
So could it just be a regular? Yeah, I guess it makes sense. Like you couldn't have a maybe like a clerk of office probably wouldn't be able to utilize it. Would a mayor of a city be able to utilize it? Do you think they can or no?
I would think they could.
Okay.
Yeah.
All right. All right. All right. So again, well, for the Florida Hometown Hero Program, how much assistance is available?
Right now, I would last I checked, it was a little over 12 million was still left in funds, but that
Oh
is
wow.
going so it really is going fast. Yeah.
Okay. So yeah, so we would want to get the public qualified now before the funds run out.
Right, exactly.
All right, all right. Now, does it include reduced interest rates as well for this program?
The rates are lower. The last one that I did was about a 6.125. So the rates are lower than any of the other programs I've seen out there. Yes.
Okay. Okay. And are there purchase price limits when it comes to this program?
It would really be depending upon the county. So it's what FHA and conventional loans allow. It would be the loan county limit.
So, all right. So, what really makes this loan unique?
It's just the fact that it's 5% of the purchase price in down payment assistance as compared to the 3.5%. But, a
Uh,
lot of things happened, with qualifying for this program, where it used to be if you're a W-2 employee, you qualify for the program, but that changed. Now they're
oh, so
just medical.
everybody. Okay.
Yeah.
So you could be a W-2 or a 1099 and still qualify for a
It
Florida hometown.
used to be, but they changed. They made
Oh,
the harder
ah,
onto, qualify. They changed the field and the type of fields
right.
that qualify.
Okay. Now, all right. So we're done with that portion. Let's move on to
Oh,
like the other loan types and qualifications. For example, like do you understand what's the difference between like a FHA, a conventional, or a VA, or even a USDA loan? Do you
um,
have any?
yes. Well, it's about the down payments. Like a conventional loan, down payments can be anywhere between 3 to 5%. An FHA loan is 3.5%. We do very little USDA. I don't really see any USDA rural loans, to be honest with
I,
you.
yeah, I
Very few.
haven't really came
Yeah.
across that here. We're here in South Florida. I haven't. I think it's more so like in the Midwest, or more so like up
Right.
north for rural areas.
Right.
We're pretty pretty developed here. So
Yes. Exactly.
okay, can um can borrowers with student loans qualify for loans?
You can. We just have to count a 0.5% of the student loan deferred balance in part
Okay.
of the equation. And if you're doing a Fannie Mae loan, it's 1% of the student loan balance. And if
Uh-huh.
it's a MAC loan, it's 0.5% of the student loan balance that's deferred into the equation of the debt to income ratio.
Okay.
Yeah.
Okay. So
So it's
how?
deferred, we count.
Okay. Okay. How do self-employed buyers qualify for these other loans?
Well, the self-employed buyer, let's say the self-employed buyer writes off all their income on their tax returns. We would take that self-employed buyer's bank statements for the last 12 to 24 months,
Hmm.
uh, business bank statements for the last 12 to 24 months. So there are programs that allow for personal too. And we take that as qualifying income. The
So,
down payment is 15%.
oh wow, that's actually good. So 15% if they use their bank statements.
Right.
Would that be called a bank statement loan at that
Yeah.
point?
Bank statement loan program. Yes.
Got it. Got it. Got it. That's actually pretty good because again, here in South Florida and Florida in general, I came across, in my research that South Florida is the number one place for entrepreneurship currently in the United States, and that being Miami number one or number two, and then
Right.
it's just between Fort Lauderdale as being number three to number four, and it's interchangeable between the two cities. So we're like top five at different cities
Right.
in the United States for entrepreneurship. So self-employment is pretty important for the public or for the individuals that reside here in South Florida. It's really important. A lot
Yes.
of people out there, making their own money, working for themselves, and there's a lot of mom and pop shops as well too here that that's how they make their living, independently. So do collections or past credit issues impact approvals?
If there's a collection account, we take 5% of that balance, and that's what we use. If there's no payment reporting on the collection debt, we take 5% of the balance and put that into a client's debt to income ratios. So unless it was a charge off, we don't count charge offs, but we do count collection debts.
Okay,
Yes. Yeah.
understood. All right, so let's discuss market strategy.
Okay.
So now the time to buy?
I definitely think now's the time to buy. Yes, it is.
Okay,
Yes.
okay, that's good. How can buyers compete in the South Florida market, though?
Well, with the buyer competing, we don't want to under offer. I know a lot of times it seems like a great idea to offer under the sales price, but that doesn't really impress a seller. And right now we want to get that seller's attention. So I would say don't get a habit of offering under sales price, offer as is, or even $5,000 higher to
I
get
think
that.
that's I think down here, because of the public not really having real estate education, or they're
Right.
not as savvy as they may think they are, they still they usually offer less, thinking it's like a TV show. I think the TV show, like the real estate shows, I think it not knowing it's scripted, the public not realizing that it's scripted, that they think that, okay, well, I saw this on HGTV, they bid it under and it went, but they're not realizing that's a city somewhere in Midwest or Canada or North, or
Right.
it's not an aggressive city, a fast-paced aggressive city or region like we are down here. We're completely unique from the rest of the United States for a reason.
And it's a competitive market. It is so competitive, Neri.
So competitive. You cannot just say, okay, well, I'm just gonna bid 5,000, 10,000 lower because I saw this on HGTV.
Right.
It doesn't work that way here. These people here, they want their monies.
Exactly.
They're not reducing it the way you see it on television. It just doesn't apply here.
Exactly.
It looks nice, it sounds good, but they're not going for it.
Right.
And the sellers, they want their money. So, I just wanted to understand that. And typically, are sellers offering concessions? Because I'm not sure.
If you offer above asking price, the seller concessions, yes. If you go 2% above asking price in asking for that seller concession of 2%, that I see happen a lot. Sellers will go for it. Yes.
Okay.
But
All right.
you have
okay. Now let's go into the mortgage process of education.
Sure.
What does pre-approval really mean?
It means that a loan officer sat and collected your tax returns with your W-2s. Sometimes you don't even need to give your tax returns if you're not self-employed, but your W-2s, your pay stubs, and a solid loan officer has gone ahead and qualified your income and has used the necessary mathematics to come up with what your approved loan amount and purchase price is. And they make sure that they're not going above your budget or what your qualified income will allow you to qualify for. They're not going to,
Oh,
yeah.
okay. Well, how long does the process usually take?
Well, I would say a pre-approval will last for 90 days because in
Okay.
90 days, the credit report is going to expire. So once you have a pre-approval, I've seen clients get into contract within 2 weeks of receiving their pre-approval letter because they have that aggressive loan officer. A loan
Mm,
officer is going to want to, work with the realtor and be available for that realtor and give what's called a desktop underwriting report to that realtor. And I've seen the two work really, really well hand in hand. And I've seen a client go into contract within 2 weeks. Then we have the
wow,
loan close. You're talking a 45-day process if it takes 2 weeks to get under contract. The closing process takes anywhere between 25 to 30 days.
got it, got it, got it. Okay. And what documents should buyers prepare when they're, going to start?
Okay, so you want your last 2 years of W-2s. So now 2025 is coming up. So try to have your 2025 W-2 ready. If not, show your 24 and your 23. The underwriter will eventually ask for your 2025 W-2, which you should get around February. Your last
Right.
two payments in the most 30-day period. Your photo ID, last 2 months of bank statements.
Got it. Got it. Okay. All
So
right.
your returns.
Okay. And what mistakes delay closings?
Well, not giving all the information to the loan officer, such as, you had a pay raise, you didn't, notify the loan officer about your pay raise, and you could have gotten more qualifying income. Or God forbid, losing your job and not telling your loan officer that. And then we find out, well, Mrs. So-and-so has not been on the job for the last 2 weeks. So we constantly check for verification of employment. So just have that open line of communication with your loan officer. Let them know everything. Don't all of a sudden open up a line of credit like a credit card, or don't suddenly get a new card during the process. That can
That
hurt.
that could definitely hurt you. I'm not a loan officer, and I know that. Like, hey, why would you do
Yeah,
that at the moment? Like, just wait
yeah,
a little. Patience, patience, and stop trying to keep up with the Joneses. Relax and just take
exactly.
your time. You know,
Exactly.
going nowhere really fast. So I always try to tell people be patient, well, too, on my side.
Right.
Um, so what do you know any ways that a buyer can strengthen their profile within 30 to 60 days? Let's say
Yeah,
it's
yes, I definitely do. Okay. The first thing that you want to do, get two secured line of credits, get two
mm,
secured credit cards, charge no more than 30% of your line of credit. When the bill comes, pay that line of credit down to zero. Let
right.
another will come, charge it back up to 30%. Let that
Yeah.
line of report on your credit report, and
Mhm.
you will strengthen your credit scores. Don't pay anything late, never late.
Got it. Got it. Got it. I like that, actually. Okay. That's actually pretty good. All right. Now let's talk about myths and warnings. Since we're talking about strengthening the reports, is 20% down actually required?
No, no. If you're getting an FHA loan, it's 3.5% down.
Mm,
So 20% down is not required. And if you're getting down payment assistance as a first-time home buyer, we can't give down payment assistance to investment buyers, but we can to first-time home buyers. Then you're putting no money down, and you just have to have enough for your closing costs.
okay.
Not need 20 down. If you're buying a condo, you need to have 10% down. It's
Mm,
type of property that you're looking at. If condo, 10% down. If we're lucky enough to get an FHA loan for that condo, then we're talking 3.5% down. But FHAs and condos rarely fit together. So
uh,
for condo
I don't
purchase,
that. I don't think the public know that. And what would you have? Like, let's say it's South Florida, sunny South Florida, so we do have a lot of condos here. what would be the, like, how could you tell, like, what can a condo buyer do? Somebody seeking to look for a condo, they're not looking to take care of the yard. They want someone, they want a condo. How, like, what would you tell them?
Have the association fill out a condo questionnaire, and that will give a lot of information about the association. Get a copy of their budget. We want to see that the budget has 10% or more reserves. We want to see that the condo doesn't rent out too much to investors, that if more than 50% of investors own the condo units, that's not going to qualify for a conventional loan. Then you have to put down 25%. You could still get your conventional loan, but you have to put down 25%.
Mm,
If investor concentration is less than 50%, 10% down. We want to make sure that the condo association has insurance, and they need insurance.
they have to have insurance. I mean, it's legal, but
Yes, they must have.
okay. So, what red flags should a buyer watch for?
If the association, if they're buying a condo, if the association doesn't have reserves, or if they don't have 10% or more reserves in their budget, that's going to be a big red flag. They're not going to qualify for financing. If the association's undergoing any construction right now, that's going to have a hard time to finance, because construction has to be completed.
Okay. Now, what are the red flags if we were looking for a single family? Are there any?
With a single family home, as long as it's livable, we want to make sure the property's habitable.
Okay.
And we want to make sure that FHA, all appliances have to be in the property. If the property's without appliances, then we can look into conventional financing with 5% down, but it would have to go conventional. But the property should have appliances, so we can go FHA 3.5% down.
Okay. All right. Well, okay. Well, I like that right there. So, and why work with a licensed Florida loan officer as well? Like, why should someone work with a loan officer?
Definitely, because they're going to have your best interest at heart. They took a lot of time and effort to get their license to begin with. They take their continuing education. They complete it every single year. Every single year, there's background checks run on that loan officer to make sure that they're operating appropriately, and they have the experience. You want an officer that has that experience, that will know how to calculate income. Because if you don't know how to calculate income, you're going to put the client in a bad situation where you're going to over pre-approve them, and in the end, they're not going to get into their house, and they're going to, God forbid, lose their deposit.
Ooh, okay. So yeah, we don't want that. So
No.
definitely go and find you a licensed, knowledgeable loan officer. That is so key. That is extremely key.
Yes.
Okay. So now we're on the last segment. This is just an additional segment. This is called Professionals and Investment segment. So it's just real simple. Can buyers house hack using these loans, the loans that we talked about?
Neri, I'm sorry, what did you just say?
I was saying, can buyers house hack? Like, are they able to house hack these using the loans?
What do you mean by house hack? I'm sorry.
That's basically them they're trying to buy it, and they're trying to, flip it out real quick, and they're trying to do things.
Well, if they have 30% to put down, they can buy what's called a fix and flip. But
Okay.
fix and flip, the buyer that's going with 3.5% down financing, because that's for primary residence, where we're counting that buyer to live in that property for at least the next few years as their primary residence.
Okay. Well, that's fine. Now we're gonna close this up. We're gonna wrap this up.
Okay.
What advice would you give someone who believes home ownership is out of reach?
Oh, get pre-approved by a loan officer. Put your assets together, put your down payment together. Don't be shy to ask a relative to help you with a gift. And we call it a gift, even if they say don't even pay it back. But give yourself a chance to get pre-approved. Never pre-approve yourself and think that this isn't possible. This is very, very possible. I've seen buyers buy with as little as $3,500 because they get down payment assistance. They get a 4% seller concession. They aggressively put out their offer above asking price, 4% above asking price, but they got their seller credit and their cash to close is literally as little as 3.5, $3,500.
That's amazing. That's amazing.
Yes,
I, I,
yes,
I love to hear that. And I love to hear stories like that because people need to know that they can actually do it. And most people are very much uninspired, especially the
right.
younger people. They're so uninspired. They just think they would rather rent. And even some are still tied in with and sometimes it does make sense, but it makes sense in the short term. They're like, hey, why would I spend all that money to buy a house? And then when I get it, it may not be the house that I want. I think you shouldn't just buy a house you don't want because that's me. But also, I do believe that, if you can get a property, you should try to get the property, and then you can always fix it to get it to where you should get it. And younger people don't
And
believe in that.
you're going to build equity, so your money's going to grow quickly in a property as compared to just putting it in the bank or the
Exactly.
stock
And
market.
I think about renting, and I think people that rent more than 2 years in a luxury apartment, and I just think you're losing money if you're staying in an apartment more than 2 years. I think it should be,
Yes.
especially if it's a luxury apartment that you're spending $3,000 for per month for a one bedroom. I think that's insane. Some people don't see it as insane. They think it's pennies, but when you really look at it, I mean, a lender would see that and see $3,000 annual, monthly. They're like, wait, this is almost 36,000
And
annually.
they do notice what one is paying for rent. Yes.
Yeah. So it just makes no long term. It doesn't make sense to me. But in the short term, I see what it says. Now, what is the first step viewers should take after watching this interview of us speaking? What do you think?
Put your W-2s together, put your last two pay stubs together, organize your finances. If you see that your bank account has, let's say, $500 in it, don't be shy. Ask a relative to help you with a $5,000 gift. We could even call it their loan, but we're not going to show that loan on
Yeah.
your debt to income ratios. Okay.
Yeah. Yeah.
But if you have at least $5,000, give yourself a shot
Okay.
and approved. Yes.
Now, how can viewers contact you for more information about this? Because you have
Sure.
some information, and I
Thank you.
think this is not enough time for us, but I just want to make sure that the viewers are able to reach out to you and get a loan or questions, and they want to start getting a loan. How can they reach out to you?
Okay, well, my phone number, and you can call me anytime, any day. It's 561-313-9678. I have my email address, which is lmcgill@afncorp.com. That reads lmcgill@afncorp.com, and I'm Lauren McGill. And you can contact me at any time or text me. Even if you text me, I'll get right back to you.
That is amazing, Lauren. I love it, and I do want to say thank you so much for allowing the A-Lister Academy to actually interview you based
Thank
on
you.
mortgages. It helps us out so much, and again, we're using this for educational purposes, and we just want to educate the public here in Florida as much as possible.
Absolutely. It's my pleasure. Thank you for your time, Nuri.
All right. Let me make sure I got the recording.
Okay.